Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. The first half of 2020 was unprecedented to say the least, forcing strategists to pivot their outlook among the rapid spread of COVID-19 and subsequent shutdowns and slow restart of the economy. Joining me to discuss our expectations for the second half of 2020 is Kristina Hooper, Chief Global Market Strategist at Invesco. Kristina, it's great to have you with us.
Jill, thanks so much for having me.
How challenging is it to craft an outlook without a typical pattern to benchmark it against?
It is incredibly difficult. If you think about this, even compared to the global financial crisis, we're looking at an additional dimension because it is a health crisis as well. So we become epidemiologists. We want to track, of course, the progress of therapies and ultimately the development of a vaccine. So there is so much more that goes into this outlook than a normal outlook or even the kind of outlook you needed for the global financial crisis.
What's your base case for the global economic recovery and what factors is it dependent on?
Our base case, and I should tell you that we have five different scenarios, but our base case is one in which we assume that the recovery is shaped like a Nike swoosh, for lack of a better way to describe it, in that in the initial stages of the recovery, it should be slow and halting and likely somewhat uneven. But then over time, it will gain momentum and accelerate. So it'll look more like a V shaped recovery as it progresses. That is dependent, however, on our assumption that we won't see a significant second wave. In fact, that we have learned from our mistakes during the first wave and will be able to tamp down any kind of resurgence very quickly. That, of course, is called into question given our inability to manage the virus well this summer in the United States.
Well, the US stock market has largely been able to isolate itself against an uncertain economic backdrop, but what about the tens of millions of unemployed Americans whose jobs are not coming back? The strength of the consumer has been the bull case for quite some time. How does that impact your US economic outlook?
Well, it impacts our outlook not just in terms of looking at the vulnerability of American households, because we know that. In fact, Fed surveys for years have indicated that reality. The most recent Fed survey, which was done before the pandemic, showed that 37% of American households would not be able to pay from savings a $400 emergency expense, just $400. So we know that the American consumer is vulnerable, but what has helped them thus far has been fiscal stimulus. And that's why one of the dimensions, of course, that we're following closely is the ability to provide more fiscal stimulus. Some countries have done it better than others. And in the US, of course, we're waiting with bated breath for that fourth phase of stimulus that hopefully will come soon. And that certainly will dictate how healthy the American consumer is. Because the reality is that many service jobs won't be in place anytime soon because of the nature of this crisis. And so we need that kind of fiscal stimulus to supplement households.
Christina, how does your US outlook compare to other parts of the world like the UK and EU? Many of those are dependent on tourism.
Yeah, so they're definitely vulnerable because of their reliance on industries like tourism. Having said that, though, one could argue, and I would argue, that their consumer is a bit healthier because they've been able to manage the virus more quickly and more effectively. And so there has been more of a return to normal in a lot of other parts of the world than there has in the United States. And I think that's a pretty strong counterbalance to the weakness in tourism.
Let's talk about Japan and China, isolated areas of Asia who have appeared to recover from COVID-19 more normally, if you will. How constructive are you there?
I'm very constructive on China and Asia EM, a little less so on Japan. But yes, these countries have learned from the past. They've lived through pandemics like SARS, and so they're far better equipped to manage it. South Korea, for example, I think is the gold standard in terms of contact tracing. China also does a very good job with contact tracing. Most Asian countries do. And as a result, because of that infrastructure, they're able to manage this virus much better than us. So I am very, very positive on China, on Asia EM, and to a lesser extent, Japan. Of course, that great vulnerability is whether or not they'll be able to hold the Olympics in 2021, given the state of the pandemic.
And finally, Kristina, the rest of emerging markets, which have been impacted by COVID-19 and face severe challenges as they have limited fiscal and public health system support.
Well, what's happening right now in the emerging markets world really underscores something that I have said for a while now, which is that we cannot treat EM as one asset class. We need to be far more discerning because there are significant differences. And as I mentioned, Asia EM has been able to manage this very well. I mean, Vietnam has done a phenomenal job. And yet, of course, we know a lot of Latin American countries have had real problems managing this virus and unfortunately have a fiscal and health infrastructure that are not helping. So EM in general has been helped by a weaker dollar, but we have to differentiate the different parts of the emerging markets world and focus on those with opportunities like Asia EM.
All right, Kristina, thanks so much for joining us on Trade Talks.
Thanks for having me.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.